So if the rate cutting cycle starts in September, it's anyone's guess how far it'll go. Maybe it's a year, maybe it's a year and a half of cutting. I would say that odds are we will really, really, I mean, it doesn't mean it can't move before. I think it will. But it doesn't, but I think that silver really start to catch up probably anywhere from maybe 6 to 9 months from now. You're going to see silver just leave everything behind in its dust, and it will just absolutely blast higher. And that's what we've seen. If you look at the last three Fed rate cutting cycles, which is, as I say, when silver takes off, it averaged over 300% return in the last three cycles. So it's just, like I say, anything's possible at this point, but it looks very bullish for silver.
The Minerals Council of Australia says the same monetary policies and investments expected to drive up the price of gold by 2030 will also push its poor cousin along. The MCA predicts silver prices will surge 27% because of increased demand for silver in consumer electronics and solar photovoltaic cell production. Former portfolio advisor and a 20-year veteran of the resource market, PeterKrauth predicts higher precious metals prices by year-end, but expresses near-term caution. Reflecting on historical patterns, he expects silver to surge 6 to 9 months after the next rate cuts begin, potentially repeating its 300% gains seen in previous cycles, making the outlook very bullish. Growing expectations that the Fed is on the verge of lowering interest rates alongside rising geopolitical uncertainties are responsible for this latest peak in silver prices. In his assessment, Krauth believes sentiment may be ahead of itself. He notes the bullish pattern for the gold miners index, which is at 78, signaling overbought conditions. Despite this, gold stocks haven't matched previous highs, making him more cautious in the near term. Gold's last two up legs, attaining new records, crested in 2020, averaging monster 41.4% gains. GDX leveraged those by 2.5x, averaging 105.4% gains during them. Yet major gold stocks are up less than half that in today's similarly mighty gold upleg. They'll catch up, so gold stocks remain an opportunity. Their glorious record second quarter results should increase sector interest among institutional investors. From a technical perspective, PeterKrauth mentions commercial hedgers hold strong net short positions in precious metals, signaling caution as the metals may be overpriced. He states gold historically performs well at the end of a rate hiking cycle, while silver tends to lag behind gold and usually takes off during the middle of a rate cutting cycle. Now we present the clips of PeterKrauth's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I'm very bullish, as you can probably imagine, both gold and silver. There's no question about it. I think that we're going to end the year considerably higher than where we are now. But I do think in the very near term, especially between now and the election, and even more so between now and, say, maybe the end of September or so, that I think there are decent odds we're going to see some kind of a correction. I think sentiment has gotten a little bit ahead of itself. And there are two indicators that I look at. One is the bullish percent gold miners index, and that tells us the percentage of gold stocks that are trading in a bullish pattern. And the last I checked, it was right around 78. Anytime you're over 70, it's overbought. Anytime you're below 30, it's oversold. So we're right around 78. That's pretty rich. And despite that, you look at GDX, for example, you see that the gold stocks have not reached the highs they were at when gold was at a previous high. I think it was back in May or so at 2,400. If I have this right, gold stocks were actually higher then. And so they're not keeping up. I think investors in the equities are sensing that things have gotten a little bit ahead of themselves. So I'm actually near term a little more cautious. So one of the other things that I look at in gold actually is commercial exposure to futures. Are commercial hedgers, are they at a bit of an extreme, either net short or net long? And I look at the same thing in silver. Right now, both metals actually are at a strong net short position. So that means that what we consider smart money in the futures world is actually looking at both metals and finds both metals to be a little bit pricey. And so that's the second indicator that I look at, and that also suggests to me that we need to be cautious at this point. I think that we do need to be careful. When gold settles, assuming I'm right, assuming gold goes through some kind of a smallish correction over the next few weeks or month, and once that's done and starts to head higher, I think that we will see silver really start to rocket. And to be fair, there's another thing that I look at, and that is how and when both metals perform when you look at Fed either rate hiking and rate cutting cycles. Gold tends to do well when you're at the end of the rate hiking cycle and the Fed rate has paused. So we're now the tail end of the pause because we know that we're about to get a cut very soon. Gold actually started doing well earlier, and that's when it does really well. What we know also from history is that silver, as you mentioned, does well, but with a lag. And silver's time to take off is when the Fed is in the middle of its rate cutting cycle. So if the rate cutting cycle starts in September, it's anyone's guess how far it'll go. Maybe it's a year, maybe it's a year and a half of cutting. I would say that odds are we will really, really, it doesn't mean it can't move before. I think it will. But it doesn't. But I think that silver really start to catch up probably anywhere from maybe 6 to 9 months from now. You're going to see silver just leave everything behind in its dust, and it will just absolutely blast higher. And that's what we've seen. If you look at the last 3 Fed rate cutting cycles, which is, as I say, when silver takes off, it averaged over 300% return in the last 3 cycles. So it's just, like I say, anything's possible at this point, but it looks very bullish for silver.
During the interview, PeterKrauth underscored that a significant portion of China's silver demand comes from its dominance in solar panel production, which accounts for 80% of global output. He references a chart by Tavi Costa of Crescat Capital, highlighting that China's recent 4-month change in silver imports has reached a record level. As China ramps up efforts to de-dollarize and secure its financial future, its aggressive stockpiling of key resources, including silver, is causing global unease. According to sources from Zero Hedge, China is buying unrefined silver concentrate from Latin American refiners and miners, effectively laying claim to Latin American silver before it is refined. This tactic allows China to secure silver at higher prices without directly affecting the spot market, crowding out Western buyers, and raising concerns about future supply and price stability. Despite a 20% supply deficit, silver prices have been capped since 2021 due to declining inventories in futures and ETFs. He predicts that this situation, driven by large buyers drawing down secondary inventories, will last 6 to 18 months before potentially leading to a significant price rise as supply tightens. Let's get back to the interview.
I think that the big, portion of the demand from China really is when you look at solar panels. So China dominates solar panel production to the tune of 80% globally. And, there was, I was actually looking at a chart by colleague Tavi Costa of Crescat Capital. He puts out some fantastic work. So hats off to him. And he produced a chart of China's silver imports, and it was the 4-month change chart. And the most recent 4-month change for Chinese silver imports set an all-time record level. So China is importing silver like crazy. I believe that is mostly dominated by its requirements to produce solar panels because they're so they dominate that field. And so I'm sure there's some investment demand built in there as well. But really, that I don't expect really to slow down very much. A lot of this green transition is government mandated. If you think back to the global financial crisis, when stimulus started, if there was one thing that everyone could agree on, it was that infrastructure was something everyone benefited from. So to plow money into that, I think is going to continue. If I look back to the sort of late winter this year, I had been asked, and I was curious myself, why was silver price looking like it was capped all the time? If, we've had these structural deficits to the tune of almost 20%. So rough numbers are there's about 1 billion ounces of supply from mining and recycling every year, and demand is now 1.2 billion ounces. So how come the silver price is not just soaring? Well, if you look at futures inventories, on the futures exchanges. If you look at ETFs, their inventories peaked right around early to mid 2021, and they've been drawn down quite consistently ever since then. So we're looking at maybe somewhere around a few billion ounces almost have come out of those different areas. These what I call secondary inventories. There was a little bit of a surge just in the past few weeks in China. That's actually come down again a little bit. So I think what has happened is these big industrial consumers have bought long contracts, futures contracts. They've bought silver ETFs, and then they've gone to the issuers and said, I want to take the physical delivery of the silver in exchange for my units. And that's how they've been able to get silver from a secondary inventory. That's, this above ground silver that's just sitting there without having to put pressure on new silver being mined. And as I say, we're down about 70% in these stocks. This can only go on for a little while longer. I'm going to guess 6 to 12, maybe 18 months. And in terms of, tapping into and draining these inventories. And after that, I think game is over. Someone's going to ask for delivery. They're not going to get delivery unless the silver price rises significantly and helps to kind of temper, this demand a little bit and reflect, a more realistic market. So, as I say, these inventories are limited. That I believe has somewhat capped the silver price. I think we're getting close to the end of that story.
Analysts' silver price forecasts range from the precious metal hitting $30 an ounce to it shooting up to $50 an ounce this year, potentially breaking out of the range between $20 and $24, where it has stayed for the last 3.5 years. How do you anticipate the dynamics of silver supply and demand will influence its price trajectory over the coming months? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.